Hello again, everyone. Thanks for tuning in. I wanted to share a few things that I just put together with regard to some of the current circumstances that we're seeing going on out in the world and its effect on us, and also to report a little bit of good news. So the title is How to Respond to a Crisis, and the short answer to that is don't. And I'll put some legs under that here in a minute. We've got a number of issues. We've got the war going on. There's a lot of violence with it. We have raging inflation, we have interest rates increasing, and we have global supply chain issues. With all those things going on, there has been and there's going to be some short-term pain. We have to get this inflation under control. Interest rates have to increase. But with regards to both increasing interest rates and inflation, again, as investors, we've got some history on our side. Goldman Sachs put out a really nice piece just recently that looked at the last six, I think it was half a dozen, interest rate increases. And during that time period, at least in the US, we saw markets increase by about 9.5% on average. If you go back and look at inflation, last time we saw it like this would have been the late 70s. And during the last few years of the 70s, we also saw robust stock market increases. We saw the same in Brazil in the 1990s. I can add a lot more if anybody wants to talk about some of these things. So over time, these things will correct themselves. It'll take a little while though. Now, there is some really good news though. Overall, we've got abundant liquidity in the financial system, really good liquidity. In the American household, it's some of the best we've seen in 40 years. For the first time in 30 years, we've got the net debt of the American household at zero. That means you take their debt minus their cash on the balance sheet, and it's zero. Really, really positive. Corporate balance sheets are in superb condition, and yet, with those positives in place, we have seen investors really fleeing from equities over the last few weeks here in April. But 30 years into this, some of you tuning into this have been around that long. We won't fall for that. We'll ultimately take advantage of it. We won't panic out. There's some mantras that we have followed from the beginning of time here, and we continue to. One of them is, with a lifetime financial plan in place, we do not respond to a short-term crisis with a short-term decision. Changing investment policy in the midst of a crisis means we're almost going to be guaranteed to be wrong, which is why we don't do it. And we hold these mantras because we know they work. The best evidence of that is the actual people that it's worked for. So in about a little over an hour, I will be going to a visitation. I go to about 5 or 6 a year when some of our elderly clients pass away. And the person whose memory is going to be honored at this visitation is now the 92nd household that we have served, where the people in that household, we went all the way to their death with both their income and their assets intact. This stuff works through up and down, thick and thin. So I just wanted to communicate that. If there's anything you want to talk about further, by all means, reach out and let us know. Thanks for tuning in. Until next time, see you.